Well, guys, the simple fact of the matter is that more banks are failing. And if we look at history, if we look at what we've seen in the past, more banks will fail in the future. The question is, what are you going to do to prepare yourself and to prepare your family for the future and to build wealth in the process? So, guys, I've been talking about this for a while. Like, we're in the middle of one of the greatest wealth transfers that we've ever experienced. And if you look at patterns, I've always said that people who can identify patterns early and take meaningful action on those pattern observations so that you can strategically place yourself where you need to be uh, to benefit from this information, they're going to build wealth. They're going to set themselves apart from the 99% and join the 1%. We've been talking about, what does it take to increase your net worth, how to build wealth. And, the stock market is a large component to that. Now, I've been an investor for probably, let's just say, the ballpark of 20 years. And even though I started off very, very small, I've been able to increase my net worth over a long period of time, leveraging the stock market, leveraging the S&P 500, the NASDAQ, the Dow Jones, big Fortune 500 companies. Now, we've seen multiple banks fail, and we've seen large banks come in and purchase them, provide liquidity to the market. Bank of America, JP Morgan Chase, Wells Fargo, and Citigroup are really the big four banks that we have. And, if we look at this pattern here, number one, the wealthiest of individuals tend to always get bailed out. And it's almost unfair. But if we look at the way that the system is designed, if the banks, if the Fed, if the FDIC didn't bail out the largest institutions, it could have collapsed the entire financial system. Now, I'm not saying that this is fair or it's unfair. I'm just saying what I've been observing. Now, the question though is, how do you put yourself in the position so that you get bailed out, so that you and your family are taken care of in the future? And this is how I'm always looking at things. Like, I could sit here and complain about what's happening in the market. I can complain about these inequalities that are taking place, but I would rather just figure out, all right, you know what? This is a little unfair. How do I strategize and position myself to be in a better position financially? And the key is, the sooner you can get your money to work for you, the less all of this drama will affect you personally. And the more a lot of this market volatility, inflation of assets, both in the housing market, the stock market, real estate, used car prices, art, business valuations, the more those things will actually start to help you. We have literally been in one of the greatest asset bubbles in American history. And during this time, some of the greatest wealth transfer amounts have literally taken place in the last 30 months. So I like to study the wealthy so that I can understand what they're doing so that regular people like me and you can get a leg up. And one of the things I realized is that wealth inequality starts really in the stock market. Like the wealthiest 10% of Americans own a record 89% of all of the US stocks that are held. And that's a pretty significant amount. So, 10%. So literally 10%, out of a 100%, 10% owns 90% of the stocks held. That is that is disproportionately, skewed to the wealthy, right? And the top 1% have gained over $6.5 trillion in corporate equities and mutual fund wealth since the start of the pandemic. That's only a couple of years ago, guys. $6.5 trillion. And the bottom 90%, we always talk about the 99% versus the top 1% of wealth in America. The bottom 90% added $1.2 trillion in corporate equities and mutual fund wealth during the pandemic. So get this, the majority of the population, 90%, they added $1.2 trillion to their net worth. But the top 1%, they added $6.5 trillion to their net worth. So keep in mind what is happening here. I want you guys to see this pattern here. Remember, when you recognize patterns and you understand how these patterns are taking place and why they're taking place, and you can reposition your personal piece on the chessboard so that you start winning. So, and the share of corporate equities and mutual funds that are owned by the top 10%, they reached a record high in 2021. Now, I'm going to just guess that the next stock market boom, the next stock market boom, we will see new records established for the wealth transfer. Okay. So keep in mind this pattern, right? Now, the bottom 90% of American households, they held 11% of individually held stocks, which is down from 12% before the pandemic. And so what this means is that the bottom 90% are getting further and further away from the top 1%. The top 1%'s wealth is growing faster than the bottom 90%. Now, stock market's role in increasing wealth and inequality has had a tremendous role in this. Now, one of the things I've been doing since, I started investing over 20 years ago is I started off real simple. I started off small. I started off with before I started my company or my company's 401k investment plan, I opened up a brokerage account and I started investing $50 per month. And, I started off with T. Rowe Price to begin with, but you don't have to start off with T. Rowe Price. You could start off with any of your favorite investment companies. I'll try to leave some links in the description down below that, so you guys can get started today if you want to. But you got companies like Fidelity, Vanguard, Webull, Robinhood, Moomoo. You've got Acorns. There are so many different investment platforms available that there's really no excuse to get started. And most of these online investment brokerage apps and platforms, you can install them quickly on your phone. You can apply for a brokerage application, for a brokerage account on your phone in like minutes. It's just crazy. So there's really no excuse, right? And so knowing how powerful the stock market is in growing wealth, one of the things I did back in the day was I cut back on my expenses. It's funny. I started off making $4.25 an hour, first job. And by the time I was making maybe $10 an hour, I started investing. And what was so funny is that I prioritized investing over everything else once I understood the power of compound interest and how to grow my wealth, how to grow my net worth. And it was interesting because I had friends of mine that were making way more than me. People were making like $17 an hour. And this is at a time when $17 an hour was a lot of money. And I was so envious of how much money that they were making. Not so much so that I could spend more and live a better lifestyle, but I looked at how much more money they were making and I was like, man, if I had that much more money, I could invest more. So my paradigm was just different than most people when it came to building wealth. Most people today, they want to earn more so that they could spend more. That's cool. You want to have a nice lifestyle. I don't see that there's anything wrong with having a nice lifestyle and enjoying nice things. I like having nice things. I live in a nice house now, but I sacrificed up front so that I could have rewards on the back end that are not, draining me dry. So, it was a matter of priorities, right? And so the stock market has been a main source of wealth creation in America, especially during the pandemic, but over the last 100 years. The stock market's been a main driver toward inequality. And if you guys think about it, like the top 1% now tops 32%, which is a record high, right? And so when we think about big names that contributed to the wealth that's been gained by the top 1%, we think of companies like Amazon, Apple. Everybody got a new Apple iPhone. What are we up to? Apple iPhone 15, 16, iPhone 20. I don't even know. I'm actually an Android user. Not hating on the Apple users, but I don't know. I think Apple makes some phenomenal phones. But so does Samsung. Don't sleep on Samsung. Rocking that Samsung S23, sir. Then you got companies like Facebook, companies like Google on the stock market, Microsoft, ticker symbol MSFT. I mean, you got some of these staples, and these companies are on the S&P 500 and on the NASDAQ because these are tech companies. And so basically the NASDAQ is more your tech-centric companies, but the S&P 500 is 500 of the largest companies on the stock market. So that's the biggest difference between those two indices. But, millions of Americans, or I should say millions of investors, they came into the stock market for the first time during the pandemic. We were talking about all this Fed money hitting the market, stimulus money, this PPP money was going out, EIDL, it's crazy. But, a lot of Americans, they didn't necessarily need the money, so to speak. A lot of people were working from home. A lot of people had side hustles, small businesses. They were generating income from their homes. And so, when all this extra stimulus money came out, it was extra money for them. And so this kind of created some asset bubbles. And so this is why we saw the housing market start going up in value. Real estate just began appreciating like crazy. And since more and more companies were having people work remotely and work from home, people were buying the properties that they've always wanted in, further and further away from the office. And since many companies were in the cities and people didn't necessarily like commuting to the cities and people realized that they could get more for their money living in the suburbs. So they started buying properties further and further away from the city. And this drove up the housing market values quite a bit. But anyway, so, Robinhood added more than 10 million new accounts over the last 2 years, and they now have over 22 million accounts. Now, keep in mind, for a lot of people, and not everyone did well during the pandemic. Let's not, pretend like it was great for everyone. A lot of businesses went out of business. The Fed reduced interest rates as low as, I won't say as low as humanly possible, but the Fed reduced interest rates, and this made borrowing money unbelievably cheap. This in combination with the checks that went out, a lot of people who didn't necessarily need that extra money, they put that money in the stock market and they began building more and more wealth thanks to the free money from the government, right? And so this is part of why there was such a massive boom in the stock market, especially when many businesses were shut down. And it's funny because I was looking, I'm like, I don't understand why the stock market is running up. Half the country was shut down. Why is the stock market going back up? And it was going up before businesses had even reopened. But this kind of goes back to why I always say, like, the stock market is not usually in tandem in terms of behavior with the economy. But a lot of people don't understand that. A lot of people look at the economy and they're like, well, the economy's not doing so well. Why is the stock market doing well? Or if the economy is doing bad, I expect the stock market to do bad. And that's not necessarily the case. In fact, a lot of times, matter of fact, if you think about it, think just recently, beginning of 2022, the economy was still very, very strong. Inflation was very, very high. But the stock market began to crash at the instant that the news broke out that the Federal Reserve began to raise interest rates. And so basically the stock market is way more of a forward-looking indicator than the economy is. So, right now we're starting to see signs that the economy is slowing down. But if you guys look at the stock market right now, if you look at the S&P 500, the NASDAQ, Dow Jones, We are right now within we're within like seven. We're The S&P 500 is less than 5% away from all-time highs. Yet, the economy is actually in the weakest position that it's been in the last 5 years, in the last 10 years. Now, I'm not saying that the economy is completely trash, but it's certainly slowing down thanks to Fed Chair Jerome Powell's raising of interest rates. Now, a lot of new investors started hitting the market, started investing in the stock market during the pandemic, and they purchased companies like Tesla. They were investing in companies like Zoom. You had Peloton, with their exercise bikes. You had Moderna for obvious reasons. And then you had Coinbase. And all of these companies, they were very popular among millennial and new investors, right? So why was Tesla so popular? Well, Tesla was just, it's like the biggest name in electric vehicles, EV vehicles. So okay, they're a dominating force. Elon Musk is selling the heck out of some Teslas. Like when you think of an electric vehicle, you think Tesla. You don't really think of any other car. Well, you think of Tesla first. At a minimum, if you think of EVs, Tesla is among them. Then you got Zoom, right? If the country shut down, well, there was more video conferencing taking place, right? You had Peloton. People couldn't get to the gyms. The gyms were shut down. Well, Peloton was selling the heck out of them bikes. People were trying to exercise at their house, trying to, improve their health. Then you had Moderna. For obvious reasons, people were getting them shots. And then, of course, Coinbase, everybody was trying to get into crypto and Bitcoin and Ripple and, XRP, Ethereum, Shiba Inu, all these, popular coins. And so, Coinbase was like the gatekeeper to allowing people to get invested in the crypto world. So, so the simple fact of the matter is that you got to look at where the wealth is. What are the wealthy doing with their money? And how do we do what they're doing on a smaller scale so we can catch up? The last thing I want to leave you guys with is we were talking about the middle class shrinking and it's going away. And I think it's a very true statement. You got the lower income, you got the middle class, you got the upper class, right? But a lot of times the media focuses on the negatives. And the negative is that the middle class is shrinking. But what a lot of people don't realize is that in order for the middle class to shrink, that would mean that you have to join one of the other classes, right? So if you're in the middle class, do you want to go into the lower class? Or do you want to go into the upper class? Now, me personally, I don't want to have reduced living conditions. So I'm going to fight like hell to get to the upper class. And this is part of why the middle class is shrinking. The middle class is not necessarily shrinking because everyone is falling into the lower class. You got to remember, you can always, there's two sides of the coin. You can fall down or you can fall up. Maybe you can fall down and you can climb up. But we'll go with that one. And so, if the middle class is shrinking, you got to ask yourself, well, what side? If you got to pick a side, if the middle class is going away, do I want to be on the lower income side or do I want to go to the upper end? So, just keep that in mind. So there's a lot of people, statistically, more and more millionaires are created every single year. And so I don't have the exact statistic on how many millionaires there are in America, but I'll be sure to share that with you guys in future videos. But do know this, I know for a fact that every 5 years this report comes out, there are more millionaires per capita in the United States every 5 years. And so what that means is that there are more and more millionaires being created. There are more and more millionaires being minted. And there's no reason why you can't be one of them. So if you guys got some value out of this video, do your boy a favor, drop a like for the video, consider subscribing. And also if you want to help the channel out, be sure to share this video with a friend. And I'm going to see you guys on the next one. Be safe.